So, how does a company that basically sells nuts and bolts not just survive, but actually thrive when the whole industrial economy is, hitting the brakes? It's a pretty wild story, and that's exactly what we're going to unpack from Fastenal's latest earnings report.
All right, check this out. An 11.7% jump in daily sales year over year. I mean, in any market, that's a solid number, right? But what makes this so incredible, what really makes you stop and think, is the environment where they pulled this off.
Yeah, because this growth, it didn't come from some booming market. Nope, it was the exact opposite. We're talking about a time when Fastenal's own top brass were calling the industrial economy sluggish and essentially flat. Not exactly the ideal conditions for growth. So that begs the question, right? How on earth is that possible? Well, the answer is pretty fascinating. They're not just riding some economic wave, they're literally building their own. And this brings us to their winning playbook. Fastenal actually calls their strategy self-help. And I love that, because instead of just sitting around waiting for the market to give them a boost, they're out there creating their own momentum. It all kicks off with a super tight focus on who they're selling to.
Okay, so their whole strategy really starts with doubling down on their biggest, most important customers. They saw a 15% jump in what they call on-site locations. Think about that. It's like they're setting up a mini Fastenal store right inside a huge customer's factory. The goal here? To become absolutely indispensable, to get so deeply embedded in their customers' day-to-day operations that they can't live without them.
And here's a perfect example of what that looks like in the real world. They had a customer they've been working with for 20 years. 20 years. And they just expanded their program from 2 sites with them to 5, basically becoming their go-to supplier for the entire country. See, this isn't about chasing thousands of brand new customers. It's about taking their most important relationships and making them way, way more valuable.
But at the same time, they're also expanding their playground, so to speak. They're making big pushes into more stable sectors. Think healthcare, universities, school districts, and logistics. Why? To build a more resilient business. One of their execs put it perfectly. These are the sectors that don't bust as hard when the manufacturing cycle takes a nosedive. Now, let's talk about the second pillar of this whole self-help strategy, and that's technology. Because you have to understand, Fastenal isn't just a distributor anymore. They're really a tech company that just so happens to move physical stuff. Just get a load of this. More than 61% of all their sales now flow through what they call their digital footprint. And let's be clear, we're not just talking about some basic e-commerce website here. No way. This is a whole ecosystem of tech designed to plug their supply chain directly into their customers' operations. And this is what that digital footprint actually looks like on the ground. It's this network of automated vending machines right there on the factory floor. It's smart bins that just automatically reorder supplies when they get low. It's a whole logistics backbone that ties it all together. They are, and I mean this literally, wiring themselves directly into their customers' supply chains. And the numbers behind all this? They're just staggering. In the third quarter, they were signing up customers for 110 new automated devices every single day. And sales through this channel grew almost 18%. That's just blowing away the company average. This isn't some little side project, folks. This is the core of their growth engine. Of course, it's not all sunshine and rainbows. To really get how impressive this is, we have to talk about the challenges they're dealing with because, trust me, the headwinds are very real. Okay, so there's this key indicator called the PMI, the Purchasing Managers Index. All you really need to know is that any number below 50 means the manufacturing sector is actually shrinking. Well, in Q3, the average was 48.6. So there you have it. That's the sluggish market we've been talking about. It's proof positive that the growth we're seeing from them is not coming from the broader economy. And here's the crazy tightrope they have to walk. On one hand, you've got rising costs from things like tariffs and inflation, but on the other hand, their customers are just plain tired of price hikes. They even have a name for it, price fatigue. Being able to navigate that tension successfully, man, that is a huge part of why they're winning. So you've got this self-help strategy on one side and this really tough economic backdrop on the other. How did it all shake out when it comes to the bottom line? Well, let's dive into the numbers. All that hard, strategic work, it translated into net sales of over $2.13 billion in just one quarter. And that's not just a big number. It's actually their second quarter in a row clearing that incredible $2 billion mark. And listen, this isn't just empty growth, where you're just racking up sales but not making any money. Nope. They delivered a super strong 20.7% operating margin. That proves their strategy isn't just about adding sales, it's about adding them efficiently. But the ultimate proof is always in the earnings, right? They delivered 12.3% growth in earnings per share. And that right there is the clearest signal you can send to shareholders that your strategy is creating real, tangible value. So, okay, let's step back for a second. When you put all the pieces together, the strategy, the challenges they're facing, the results on the board, what's the big takeaway here? It's pretty simple, really. Fastenal is not sitting around waiting for a rising tide to lift its boat. They're out there building a powerful engine of their very own, fueled by deep customer integration and really smart technology. They're actively snatching up market share just by being a better, more embedded partner, no matter what the economic weather looks like. And all this leaves us with a really powerful question, I think, for just about any business out there today. In an economy this uncertain, is waiting for the market to get better even a real strategy anymore? Or, as Fastenal's story seems to suggest, is the only reliable path to growth the one you go out and build for yourself?